How many people will be attending?
Nobody's attending this as we do it. So we're just recording this offline, which means that if you want to do a take two on something, you're welcome to. So it's all going to be post-production released. Cool?
Good.
All right. Let's get rolling. Welcome to the Vistage podcast series. I'm Dave Nelson, a Vistage member since 2003, part of CE 676, a CEO group out of Pittsburgh, and your podcast host. In this series, we always get valuable ideas to apply in our own businesses. Today, I'm joined by Bill Legier and Michael LaCour. Bill is the founder and managing director at Legier & Company, and Michael is a manager in the litigation department. I understand that you have a lot of experience with storms. As we're recording this, we've recently seen Harvey blow through Houston and Texas, and Irma is bearing down potentially on Florida. But any business can experience a storm or a business interruption, a natural disaster. So what should we know?
Well, thank you very much, Dave. This is Bill Legier, and I'm here with Michael LaCour, as you said. We've been through a lot of these hurricanes, in particular Katrina, which was absolutely devastating. And our hearts go out to all of you who are suffering right now and not knowing exactly where you are with your businesses. We've been there, done that, but it's not like what you're going through now. It's a terrible situation. So what we've done is we prepared a slideshow that will help you to understand some of the salient points to your business interruption coverage and how it might be triggered. Very important. To the extent that you've got the coverage. Would be more than happy to look at anybody's insurance policies and give you some advice as to what we see, but that's going to be something that you'll have to decide as you go forward. The first slide that we're going to open up the webinar with deals with business income coverage. It deals, and you'll see these words oftentimes in your policies. They'll vary from time to time, but generally you'll see these consistently there. You'll see the term actual loss of business income. You sustain to the necessary suspension of your operations during the period of restoration. Those are key words. Covered cause of loss. The suspension must be caused by direct physical loss or damage to property at the described premise. There's exceptions to everything, so please don't take these as hard and fast. Let's drill down into those and see what we're talking about. There's, if we'll go back to that slide, please, Michael. Covered cause of loss is very important. You have to have coverage that will trigger with damages a claim for something that is covered. Roof damage, wind damage, generally not rising water alone with a flood coverage, because flood coverage doesn't trigger business interruption. It doesn't have a business interruption component normally. So the covered cause of loss is important. If you do have that, whether minimal or not, the shingles blow off, you got water in, it triggers your business interruption coverage. That's very important. Without it, your insurance, as far as your business interruption side, is not going to be triggered. There's something called a deck sheet, which you're going to be probably looking for pretty quickly. It's a summary of your coverage. It tells you the limits. It tells you the deductibles, the waiting period before which you can collect business interruption. Co-insurance clauses, a percentage of the value, very important. These are things that I can't go into in great detail now, but you want to be aware of, because before you contact your insurance adjusters, you want to be coached and you want to be prepared with all of these to know and to be able to avoid stepping in the wrong direction, because words once spoken are like eggs once broken. You just don't take them back. Claims data expense is another area that's important. That's simply, will they pay the cost of the professionals that you must hire to calculate your business interruption claim? It's not something that you do every day, so you would not be expected to know a lot of these things. Having done thousands of them, both with Katrina as well as the BP oil spill, we know just about everything that you need to know to the extent that it can be known about these claims.
Listeners may not realize, but Bill and Mike are coming to us from New Orleans and had personal hands-on experience with Katrina back in '05.
That is true, Dave. First of all, there's a couple of definitions that you'll likely see in your policy. One is the definition of net profit or loss before income taxes that would have been earned, but not net profit or loss that would likely have been earned as a result of an increase in the volume of business due to favorable business conditions caused by the impact of the covered cause of loss. A lot of times we thought that if we were in a business that would benefit from a storm, that we would get the revenues and the profits on those revenues that we didn't earn, that we would have earned had we not been damaged and had we been able to do this onslaught of rebuilding, for example. Not so. They want to look at what you would have done had it not been for the covered event that you're dealing with. Plus, continuing normal operating expenses excluding ordinary payroll. It does get a little bit complicated, but once you've had a chance to understand what these words mean, I think you'll see where they're coming from. So your loss, in essence, in this definition number one, would be the profits before income taxes that you should have earned but didn't earn. And then you would add back to that continuing normal operations, which include or exclude ordinary payroll. For example, the next slide will explain that. Ordinary payroll is the payroll that you would continue to have to pay to keep your key employees, to keep your executives, your managers, but not the people who are on the rank and file who they expect would not be continuing on your payroll. So that's one definition of lost business income. The next definition is it's kind of like the yin and the yang of that. It's your lost revenue minus the expenses that you saved. If you lost $1 million in revenues and you saved expenses to the tune of $900,000 because you didn't have to purchase the product that you resold or you didn't have to pay certain people, then you would subtract that, and the difference is your lost profits for the purpose of the claim. Now, here's an example of the period of restoration. They vary in every policy. Some policies will go as far as a year and perhaps more. That is the period during which you are expected to rebuild to the condition that you were prior to the storm or prior to the event that you're dealing with. Oftentimes it's 12 months. It could be an extended period as well. Now, but for means that is the but for net income before taxes, revenues that would have been earned had no loss occurred. And they oftentimes will look historically to see what you were doing historically in revenues to determine what you would have been earning in the period of restoration to determine your but-for revenues. Oftentimes we'll go in and we'll say, well, no, there's a growth rate here. And you've got to give consideration to that. If you were growing at a rate of 10%, then you might, or you can even use trending. You might be able to achieve a higher level of but-for revenues that you would have earned but for the event by negotiating these types of provisions. Once you've got your historical amounts and you project it into the future during the period of loss, the likely amount that would have been revenues had no loss occurred is going to ultimately be that starting point.
Just out of curiosity, Bill, there's a lot of data here. I can see that. What happens if a business owner has lost key documents, maybe because computers were damaged? Do you ever see that situation, and how do you handle it? Or what would you advise a business owner who maybe hasn't yet suffered a loss to do to protect this data?
Well, absolutely. The first things are you've got to find computer consultants who will help you to achieve that by getting your hard drives salvaged. There's places that can restore them. We had that situation where they went underwater and we were able to restore them. In other situations, we had to go back to governmental agencies to get their sales tax reports and other documents that were available from independent third parties who they had provided those to. So there's ways to get back into those numbers. They're not always the easiest, but you can generally find them from outside sources if you can't find them internally.
Interesting. Sounds like a little pre-planning, though, for the typical business owner before experiencing a loss would be a really good idea.
Indeed. We recommend that all of your offsite record retention from an electronic standpoint be first and foremost in every business mind, so that in the event that they do have a loss of their internal computers, they can go back and find this from backup sources that are outside of the area. As a matter of fact, our firm backs up our information in the cloud, so we can always retrieve it. We learned that firsthand because when we got back into business in Baton Rouge, we couldn't come back into the city of New Orleans. We had to recover this data, and it was a learning experience for sure. Okay, it's got to be, the extra expenses are something that are important, because if you have to spend money, for example, for generators, for truck rentals that you would not have incurred had there been no event, and you're going to be able to recover that, provided that you've got extra expense coverage in your business interruption policy. Keep track of those expenses. These are expenses that are necessary to make sure that you would minimize the suspension of your business, and you would not have incurred had it not been for the loss. And it has to be at the described premises. It has to be a replacement premise where you may have to go and move your offices. That would be covered as an extra expense. They're time sensitive, as everything in the policies are, 12 months generally, but every policy is different, so I caution you to look at what those periods are. Now, there's something called extended business income. If you've got that coverage, it's very helpful. And that is after your period of restoration, when you're required to restore your premises and your business to the condition that it was before. For example, if you're a retailer and it takes time to open your doors and get your customers to come back, oftentimes policies will have that provision where they will extend your business interruption period until that period of extended business income is passed. It will end the earlier of, it begins on the day the property is actually repaired, rebuilt, or replaced, and it ends on the earlier of the date you could restore your operations with reasonable speed to the condition that would have existed if no direct physical loss or damage had occurred, or in some cases, 20 consecutive days or more. Now, I believe for those of you who are dealing with flood only, and you don't have coverage for a windstorm that would have triggered, and you have no damage to your building other than flood, or your flood policy does not provide for your business income provision, and they don't, unless they're a special policy. Then you can look to civil authority where there has been a declaration by a governmental agency that prevented you from getting into your business and doing business. That's loss of business income would be covered, extra expenses would be covered. It has to be by action of civil authority. It has to prohibit access to your described premises, and it's got to be directly, due directly to physical loss or damage to the property other than the described premises. And that could mean that the lights, the electric company, the water company, all of these various governmental sources of utilities would have been shut down and unavailable to you, and an active civil authority would be declared by the governing authority at that particular geography. Now, let's talk about causes by or resulting from a covered cause of loss. Oftentimes you will see that you may have to have a covered cause of loss. Some places you don't. In other cases you do. So these are all things that you want to look at. And it's all clear, it's all in your policies. And if you don't have your policies because they were flooded, then you should be able to get them from your agents as soon as possible. And it's time sensitive. Now you're going to find that there's going to be other definitions in your policy that are going to be very important. They could be very tricky. There are a lot of defined terms, and unless you go back to those defined terms and understand what they are, how they apply, and how they don't apply, it's very important. We talked about utility failure. If your utilities are out at your location, that's one thing. If they're out for the whole area and it isn't within your premises, that's another condition. These are things that you have to look at your policy to determine if they apply to you or not. Dependent property coverage is important because if you've got that, it could mean that a key supplier or another area of your city where you may do business. For example, if you're a doctor and you're working in a hospital and the hospital is shut down, if you have a key supplier that provides you with materials that you cannot get because they're closed, if you have this coverage, it could be triggered, and if it does, it would trigger your business interruption coverage. Look at the entire policy and all of the riders. Riders are additions to your policy that describe other conditions that you need to be aware of. Endorsements are added oftentimes to add coverage. And then, of course, you've got what they call exclusions and inclusions, and there are more of those than you care to know about. And you may think that you've got coverage, and you're reading this wonderful policy provision, and then you go to the back of it, and it's excluded for some reason. Unless you have your policy thoroughly studied and analyzed, you really don't know what your coverage is until you have that. And it's a little bit unnerving when you're trying to get your business back together and you're having to deal with all of these issues. As I said, we've been there, and our hearts go out to you in hopes that you will be able to find some way in your insurance policies to find coverage that will help to make your life and your business a little bit better, notwithstanding all the upheaval that you've been through. Mitigation, finally, is very important. You can't sit back and not do something to mitigate your loss. When our business was closed in New Orleans, we were told we could not return to New Orleans. We're in a 34th floor suite of offices. We had to find a way to get back in here with trucks, get all of our computers and files and move them to Baton Rouge. Had we not done that, and had we been able to do that, there would be question as to whether or not we did our best to mitigate the loss of the insurance company and our loss. And finally, a proof of loss, a claim needs to be filed. A claim is important because it goes on record with the insurance company, and you have so much time to do that, for which you've got to file a proof of claim. A proof of claim is a documentation of your claim. It shows how much you lost, the calculation that you are using to support that claim. And then finally, a lot of times people say, well, the insurance company came in, they sent their team of people, and we have it all done. Well, I can assure you, and I've been doing this a long time, that we never find that they're going to give you every benefit of the doubt. You have to have someone independently looking at these things to make sure that you're not missing something, and certainly they're not going to go out of their way to increase your claim. It's up to you to do that. So again, if we could be of any help, we'll be more than happy to do so. At no charge, we'll be happy to look at all of your policies and see if there's something in there that we feel could benefit you and advise you. And then from there, we wish you well.
Bill, this has been a great overview. Just one last question in wrapping up. We're all reminded now that these disasters can happen. What would you recommend for a business owner who maybe hasn't even thought about their insurance for a few years? What should be their next step in looking at their policy and firming up any gaps or weaknesses?
Well, understand that flood policies do not provide business interruption, and if you only have flood, you do not have the business interruption. There may be a way to find coverage that would allow you to trigger that business interruption should there be a flood. Now, it's not always easy to get certain types of special coverages, but you can certainly try. More importantly, though, you want to understand what your business interruption coverage is and what it takes to trigger it. A covered cause of loss. Just because your business is closed doesn't mean you're entitled to file a claim. There's got to be a covered cause of loss. Damage to your building that caused some repair work that has to be done. It doesn't necessarily mean the magnitude, as I said, it's the fact that you have a claim. So, and you want to make sure that you got the longest periods of restoration, at least 12 months. You want to make sure that you get the period of extended restoration and that you have extra expenses in an amount that is satisfactory. And finally, you want to make sure that you get claims data coverage, because that will pay the cost of whoever it is that you hire to calculate your claim. And if you have that, they will reimburse you for that cost, and they will not require that they do the claim themselves, but rather they certainly expect you to have someone representing you. And then if it gets complicated, as sometimes they do, you need to have a good lawyer who's experienced with this. When they go to court, and we don't advise that, but unless it's a last ditch effort to get your coverage to the point that you need to collect, we recommend that you have a good lawyer who understands business interruption and the insurance policies that go with it. It's not the kind of thing that most lawyers do every day. Someone who's done it can be very helpful.
All right, fabulous. Well, let's wrap it up there. We've been talking to Bill Legier and Michael LaCour of Legier and Company. Hey, thanks a lot for joining us today.
Our pleasure, Dave.
And thanks everyone for listening to this episode of the Vistage podcast series. We'll catch you next time.
Thank you.
All right, we're clear. Thanks a lot. That was great overview. I'm sure that would be very helpful to a lot of people.
Well, if you want, can we get a copy of it?
Oh, absolutely. We'll make sure that, because this is going to be released both to the Vistage membership internally, but also used for external purposes. So we'll definitely, I'll have Mary Jo get you a copy of this when we release it.
Thanks, Ken. Thanks.
All right. Take care, guys.
Bye.